Hey, Kostav,
Hello.
thanks for joining today's call. How are you doing?
I'm good, thanks. How are yourself?
I'm doing great. I'm doing great. Where are you located?
I'm based in Spain, in
Spain.
Marbella. And
Awesome.
and yourself? You studied in Stockholm, but you don't
Exactly.
live there, or you're kind of there. But
Exactly. So I came to Sweden when I was 7 years old. So I studied here in Stockholm, and my family living
okay,
here in Sweden. But right now I am between Sweden and Dubai.
okay, all right. No, because my business partner Tobias, who's founding partner together with myself of Love, he's based in Dubai as well. So, and I'm gonna go down this week to see him, and we're having some meetings. So I figured maybe
Awesome.
we could.
Where you would be in Dubai? Where you would be in Dubai?
Where?
Yeah.
No, yeah, I guess around the marina somewhere. I mean, he
Marina.
lives down there. I'm gonna stay in a hotel, the Hilton out on the Palm. So I don't know. We'll see.
Awesome to hear it. So you will start your own office right there? Is that the plan?
No. I mean, so we have a fund which is based in Luxembourg, and we're just in the process now of starting to go out and start the fundraising for fund number two. But that will also be a Luxembourg-based fund. But my partner Tobias, he moved to Dubai some, I don't know, 12 years ago, maybe something like this. When he was working for KPMG before we started Lab, and then he got married and got stuck there, kind of, if you will.
Got it. Awesome to
Yeah.
hear it. So right now you have a fund in Luxembourg, and are you looking to raise capital for it, or how much capital have you raised for it so far?
No, so we raised about 25 euro for fund number one. So now we're in the process of starting marketing for fund number two. Basically, what we do is that we buy non-performing loans. So claims of defaulted loans, that were originated by banks typically, and then we team up with, well, collection agencies, in the respective jurisdictions, and try to work out this and recover as much as we can out of the portfolios. So that's in essence. I mean, in terms of the structure of the fund, it's a Luxembourg partnership, or kommanditbolag as it's in Swedish. So very kind of plain vanilla private equity type structure with private equity type waterfall with preferred interest as a hurdle rate of 8%, and then we have a carry split of the remaining cash flows once that's been achieved by the partners. So for fund number one now, we're just did our last sort of cash sweep type investments in December now, to deploy the last bits of remaining undrawn capital, and also recycle cash flows from other portfolios that we already had invested into. And the investment period is finishing, now here any day, basically. So now that fund goes into harvest mode, when we will just distribute cash back to the investors every week, every month, as cash flows get realized from the funds. Um, and I guess that's kind of in a nutshell. I mean, for fund number two, we're looking to do basically the same type of structure, the same type of mandate. So the mandate is formulated as distressed assets in Europe, whereas, as I already mentioned, I mean, we're looking for larger portfolios of hundreds or thousands of claims in the same portfolio that we buy from banks. In terms of geography, we're looking at the Mediterranean countries and selected parts of Central and Eastern Europe. We target net returns of 12% unlevered to the investors. And typically I would say that the fund life, I mean, of course, the legal life is what, 8 years or something like this, but you know, we forecast full recovery on invested capital in less than 5 years, and then well, obviously additional cash flows after that in order to reach those return levels. So I think in terms of the investors that we have, I mean, what they really appreciated with it is that it's a short duration or short weighted average life type of investment, will still you know, retaining very strong elements of high profitability and sort of you know, continuous cash flows, if you will. It's not, I think the bigger, of course, there's risks with everything, but I think that if you compare it with a private equity or venture capital type of fund, I mean, we're really realizing our forecast continuously, and it's not like, you know, oh, once in 5 years, once we put this on the exchange, you know, then this is going to be 10x. But our profit generation is much more gradual and visible, I guess, towards the investors. So we do have a mixture of private individuals and family offices in the first fund, and then we have a large Swedish pension fund with us as well, which is yeah, good for marketing purposes, obviously. And yeah, now we hope that we can maybe raise up to 100 million in fund number 2, and certainly the you know, the market opportunities there and the pipeline and, you know, all the internal capacities required for it. So I think we're in a relatively good spot there, and we have some pretty sizable interest for fund number 2 already as it stands. That said, we're still working on the last bits and pieces of the documentation and, you know, all this stuff that we need to put in place. But yeah, I saw your message and I figured, why not? Let's have a chat.
Yeah, awesome. Thanks for sharing that. And right now, the main question right here is, how much are you making? How much have you already made during the fund 1? How much are you making from running this business right here?
So, I mean, in terms of our general partner income, you mean, or
Exactly, general partner. Exactly. What do you have for interest right there?
I mean, we have about 1.7% in management fee on an average. So yeah, that's, I mean, carry obviously for us comes after the investors' capital and the hurdle rate has been fully repaid. So that's, we have a European waterfall in terms of the carry split.
Awesome. So management fee, it would be 1.7%. Now we're talking yearly.
Yeah, on the committed, or, you know, committed, which now once the investment period ends, I mean, it goes over to you know, drawn capital, right? But yes.
Got it. And you have already raised 20 million euro for the first fund, correct?
Yes, 25.
Yeah, fine. How have you done that?
Well, I mean, we've been leveraging off existing contact networks. I mean, basically, we've been doing the fundraising ourselves. We've had some discussions with some placement agents, and, you know, but they sort of, yeah, not so good.
Got it. So you have done that through your own connections.
Yes.
And you have done the presentation and you reached out to investors. And how long it took you to raise 20 million?
I mean, I think we raised it in say the week. It's a little bit, because we did some investments before we started the fund with investors that then became LPs of the fund, and we rolled those investments into the fund. So it's a bit, but say that it took us about a year, maybe in total,
Exactly.
you know, give or take.
About a year to raise 20 million. Do you think it took a lot of time, or do you think like it was completely fine?
I mean, it's of course it's a punishing or non-rewarding type of work, right? I mean, it's like cold calling to apply for jobs, I guess, or whatever you want to compare it with.
Yeah.
But I think it's just, I mean, it's just a matter of hitting the phones, right, and making the calls, and eventually people will you'll find the right counterparty. I think the challenge for us, I mean, we will obviously, both myself and Tobias, work very actively on raising funds for fund number 2 as well. But if we can, team up with external parties that can help us with this, then cumulatively it should be better off for everybody involved, I guess.
Yeah, and you're looking to raise 100 million for the fund too. So it will only if
Yeah.
it will take you the same amount of time that took you to raise 20 million, then it's a lot of time.
Yeah, it's a lot of telephone calls that need to be made, but I think that's what we have this time around is obviously, I mean, that we have a track record. We have a fund that is fund number 2 that is already up and running. I mean, it's not just a look at our shiny PowerPoint, this is what we promised that we will do, but we can actually evidence that this is what we have done. We also have a team in place now of our own, apart from all the external resources, of course. So I think we're a bit more mature now, and that also comes back to, quite deep discussions that we've had with LPs that are interested, but that couldn't join, for example, fund number 1, right? Because they're just restricted from doing investments into the first vehicle. So I think there we have a pretty good starting point already in those discussions that hopefully we can now convert over to actual interest and subscriptions.
Awesome to hear that. And are you looking to do that before the next quarter of 2025? Do you have any plan on that?
Yeah, I mean, it's a kind of a moving target, I guess, but hopefully if we can get all of our ducks in a row here and then we can do a first closing in the fund during Q2. I think that's realistic. So say that we can put get the first investors on board then, and then we have basically the way that it's structured is that we can do additional closings into the fund and add more investors in during a 2-year period, which is the same period that you have them for the investment period, right? So as long as the investment period runs, we can add more investors and add more commitments to the mix, if you will. But clearly, I mean, it would be best for everybody if we can do it as squeeze this in as closely as possible to the first close, right? That goes without saying.
Got it. And right now, do you have the intro deck in the place? You are working on it right now?
Yeah. No, I mean, we have a pretty advanced draft. I could share with you our. Bring it up on the screen. I have a fact sheet. The presentation, I'm still working a little bit on that.
No rush, take your time with it. But before we taking anything further, so we would love to take a look on everything.
Yeah, I saw the presentation that was attached to one of the emails.
Yeah.
Before. I think that's interesting. Sorry, my computer's acting up here. But I think what would be interesting to hear a little bit more. I saw that you had some of course some case studies or previous cases that you've been working successfully on. Congratulations. I mean, it seems like you guys have good traction. in your work. But it would be interesting to understand if you have been working on anything similar to our fund. I mean, obviously the fundraising exercises that you highlighted there was, slightly different types of fundraisings, right? For it was more raising equity for companies or SPACs and things like this, which is, I guess, somewhat different in nature to what we're setting out to do.
Totally. We have partnered up with a crypto hedge fund in Switzerland called CRV. We have partnered up with them in 2024. We have raised over 22 million for them. We have also partnered up with a private bank called Danske Bank in Stockholm, Sweden. You are already Swedish, you know about them. We have increased our under management by over 5.6% in 2024. At the same time, we have already signed an NDA, so I can't just go into the same exact campaigns that maybe you are aware of that, but that's what we have done lately in the last 2 quarters in 2024.
Okay. And have you had any mandates specifically within credit type products, or not distressed assets or anything similar to what we're doing?
I will be completely clear with you. I haven't actually been in this type of sector before. That's why I told you lately. We need to take a look on the docs. We need to take a look on the intro decks that you currently have, and if that makes sense to us. So we would actually tell you what we can provide for the structure. If we can, so maybe I can provide like some free sources later on just to take a look on and just to see if that it will work out with you by your own sources.
Of course. Just wanted to share with you. Sorry, I hope this works. Can you see that?
Yeah, I see.
Is it too small?
Actually, yes.
All right. This is not ideal. Hang on. Here we go. So we put together a little, just a little 2-pager as a sort of a teaser thing that we're reaching out to people with. So there's a little bit of information about the strategy and sort of the key terms that we're setting out to for the marketing. And then also, of course, interesting here, you have a little bit of a preview on the track record. So I think there again, we have a pretty healthy IRR in terms of the underlying portfolio for the fund of just about north of 17.5%. The total investments that we've done, obviously, we're recycling capital from investments that we've already done, right? Since they're all cash flowing basically from day one, meaning that we've been able to invest quite a lot more than the commitments in the funds itself. Acquired assets, that's basically the amount of the underlying claims for the portfolio, since we're buying these claims at a pretty deep discount, right? As you can imagine. We've done 11 portfolio investments in the first fund, and as it stands now, as the investment period ends basically now, the forecast as it stands now, investors will have their full principal recovered in about 2.5 years time from today. So I think this coupled with returns of this level, I think is a pretty appealing proposal to investors. And this is obviously something that if you in a well-diversified portfolio, this obviously has some pretty sizable advantages, both in that it's this asset class is typically uncorrelated or very weakly correlated with both bonds, equities, real estate, and what have you. And typically people are saying that, it's considered to be an acyclical type of investment profile, if you will, that appeals to quite a lot of both private individuals, but also to institutional investors, in that you'll have quite low volatility of the returns, meaning that you obviously get a short quote that is quite high. So it allows people to take riskier bets in other parts of their portfolio, if you will, if that makes sense.